Gold saw its second largest daily decline of the year today, down about 85 bucks in a $108 range, all coming as stocks are surging and yields are surging in the US, while a vaccine announcement comes out and shakes up the markets, and the potential for some positive news coming out of the COVID world. At this point, it is just that, all news, but we see an instant reaction. We see gold prices get hammered today as the more attractive allure of equities and higher yields steal some of the thunder. At this point, gold's going to be looking at that 1850 level as first support. That was the low today. It goes back to the late September lows as well, so it's not really a moving average type of low, significant momentum low, but certainly will be a psychological one. Obviously, the 100-day moving average well above the market now at around 1911. That's going to be your first resistance. Anything to the downside to get down below 1850, it's going to become a vacuum. There isn't a whole lot of trade down there. There's not a whole lot to chart at that point. Even the 200-day moving average way down there, we haven't traded that since back in March. So at this point, gold prices are going to be a little more volatile than usual, given the fact that we've got still uncertain election news, still uncertain Brexit news, still uncertain what the Fed's going to be doing here. If there is a vaccine, will they take their foot off the gas? Will they not? So you're going to have some crazy type trades in gold in the days and weeks ahead here, as we can take in more information and try and find some resolution to a lot of the issues that are up in the air and outstanding. The dollar was the other variable here. The dollar, which had been trading down, got hammered late last week down to the low. The dollar index got to its low near 92, the low end of the range, that 92 to 94 range it's been trading in. Reversed everything and took back all those losses from Friday. Certainly has a little more ground to gain if it's going to make up all the losses we saw last week, but got back close to just above 93. So we're back to the midpoint of that range. That strong dollar obviously helping to push gold prices lower as well. And lastly, this positioning here in gold. We've seen gold speculators getting out, the longs, exiting their longs as of late. My sense is that they were probably seeing a big exodus here on the big move we saw today, $108 range, trading through key moving averages like the 100-day. Certainly you're going to see them get out. It's uncertain as to where we were, who was getting back in. 1850 was more of a psychological level. As I said, it was the old low from about late September. But not a moving average type of support. So at this point, speculators may be looking to get back. We did see a $20 push higher off the lows late in the day, maybe some short covering, maybe some of those just looking at that level as a good buying area. If we get south of 1850, it's really going to be a vacuum, as I said earlier. So that might be a line in the sand to start watching. But gold prices seeing a big move lower on positive news about a vaccine, higher equities, and much higher yields in treasuries.